Well, hey, just start. We'll go ahead and start. Today didn't get the good memo. Yeah, I hear you there. But in general, on a good note, the my personal DCA portfolio, which you guys know I update in chat, and I updated in that quarterly series of posts. It hit a new all-time high yesterday. So like that's pretty comforting from my end. Like we said, just trying to grow it slowly over time. But to Tom's credit, to what Tom said, today it definitely didn't get the memo. So
Well, congrats on getting it to a new high. That's a good thing.
thanks. Just keeping my head down. I think Dom said something similar in chat, and I just said I'm just grinding. Like these small milestones, positive reinforcement is very important. I feel like when you've made a good trade and you made money for the right reason, not for taking excessive risk, but you made money for the right reason. Whether it's just going out and grabbing a drink with friends or taking the family out to dinner or a random road trip. It's nice to reward that in some way to hopefully keep the cycle going of making good decisions. So that's what I try to do. 2 days ago, we went to the hot springs here. They call them the hot springs, Hierve el Agua, the boiling hot springs in Spanish. But they're pretty cold. There was no sun, so I'm still feeling the effect now. The other thing I was going to mention on a bright note, two more things. The first was the level of M&A activity this year versus last year. It's interesting. We still have, what, 5.5 months left in 2025, and buyout activity M&A has already reached 40 billion dollars. Versus last year, the total was 30 billion. They shared that on Biotech Clubhouse on X this morning. So I thought that was pretty encouraging that we've already topped last year and we have over 5 months left. So hopefully a good sign that things are improving for the sector. And the other bright note for me today is if you guys saw AGEN and INKT, I don't own either of those, but it is nice when you see speculative biotech names that are down and out, especially the ones that everybody hates. Uh, when they or they're heavily shorted, and 25% or more of the company is being bet against by the shorts. When you see those go up, not just a little bit, but 100%, 200%, or last time I think I saw on FinViz, INKT was up something like 500 or 600% for the day. Now it's nearing a 300 million market cap. I love seeing shorts burnt pretty bad like that because that's like a signal for them to stay away from biotech, that there's better risk reward for betting against companies in other sectors. So I remember back in 2018, 2019, pretty good years for ROTY, Roti, for our group. We had quite a few names, not necessarily that we owned them, but we would see them, take off and become 5 or 10 baggers. And I felt like that's always a sign of sector health. Another sign of sector health being I was looking at ORIC Pharmaceuticals, ORIC, and their secondary offering was pretty recently at $6.50 a share, and now it's nearing $12. And so when biotech was doing pretty bad, you're noticing that there's lots of secondary offerings at this level, and then the share price plunges, and all these funds who invested in the companies get burnt. The exact opposite of what you want to see. And so now we're seeing the converse side, which is where they get in on an offering and the stock goes up. And so they're getting rewarded for financing these companies. So when you take M&A activity, you take speculative running stocks, you take secondary offerings pricing well, all of those things together are incrementally pointing to improving sector health. And the last thing I'll say before I leave the floor open is I saw a note hour ago that Jay Powell is looking at resigning. And if he resigns, a lot of people in chat, smarter minds than mine, were talking about rate cuts being the signal for lots of other funds to rotate back into biotech. So it's just interesting from my side. I'm not cheerleading or saying rah rah, everything's going to get amazing, but it is nice to see all these incremental signs going in the right direction. With that, I'll leave the floor open. If Dennis or Tom or any of you have anything you want to say.
Well, I just if you go back to the fourth quarter when there were interest rate cut drums, basically when the first inclination came out that inflation was maybe under control and things were going to spin around, everything ran up quite nicely in the fourth quarter. And then when the tariff uh, activity all kicked in and all of the negative tariff pundits and everybody that took Trump at face value and assumed that the world was going to come to an end. I mean, biotech's kind of been on a skid ever since then. I think if we get back to the mentality that we had in, I don't know exactly, I'm going to say November, December, I think is when things kind of, maybe October, um, the outlook forward improved. And I think if we get to a place where people aren't fearful about interest rates, we're going to see biotech go up again.
No, makes sense. I think everybody's kind of waiting for that shoe to drop, but in a good way. Like, what is going to be the signal? That's been a constant topic in chat. What's going to be the signal to bring, especially generalist investors, back into biotech? I noticed one thing recently, some of the new guys we have in chat, even though they are silent, they have pretty big followings on X, Twitter, and they are more growth investors, and they love the intersection of growth and biotech. So they don't like investing in, science projects when these companies are highly binary, but they do like investing in these companies when it's something like an Arcutis, ARQ2, where ARQT, sorry, where Zorv is already approved in 4 indications, and it's just about sales ramping up this year and next. Or Tarsus, TARS, same thing with Xdemvy, sales ramping up this year and next. And they also have the ocular rosacea program entering the clinic. So for me, that's been fascinating as well, an area where generalist investors or growth investors are interested in biotech, and it can be profitable for us if we can find those companies before they're well recognized, whether that means they're already commercial launch or they are late stage, looking at having an approval soon, and then a launch is coming. Um, but the humbling side has definitely been staying away from areas where I know I've been shown time and time again. I always say I'm a slow learner, but eventually I've learned that preclinical biotech or early stage biotech, my hit rate there is probably something like 30%, a very bad hit rate. And the math just says I shouldn't touch those areas. I need to stick to late stage biotech or commercial. I don't know if you guys have found something similar for you.
It's the squirrels, Jonathan. Got to watch out for the squirrels.
I don't know. Some of those squirrels have such high upside, though. They're so irresistible.
You definitely like squirrels for pets. There's no doubt about it.
To be fair, our current squirrels, off the top of my head, we have Biohaven, we have Arrowhead, we have Regenix, and we have Wave. I think we might have one other, but they're all the majority of those have PDUFA dates later this year, and will make the transition to commercial stage launch, etc. So again, the important thing is for me steering clear of science projects. That's where you have those huge binary losses, where the companies are throwing things at the wall and seeing what's working. Um, or even recently, people in chat are giving me way too much credit for Rare, RARE, which we sold just before it lost 30%. Um, they asked me, how did you know setrusumab's second interim analysis was going to fail? And again, I had no idea it was going to fail. For me, it was just a risk management trade. You guys know in Playbook, which are potential setups I publish for you all each month of companies that I might rotate money into if dollars free up. And near the top of Playbook, I had Tarsus, TARS. I wanted dips to 39, and Arcutis, ARQT, sorry, that I wanted dips to 12. ARQT I'd actually removed from my list. I thought it wouldn't get there. I thought it ran without us, and then it dropped to 13.20. So I sold the rest of Rare to buy that. And same thing with Tarsus. It fell to 30 high 39s and bought that. And the trade was simple. The rationale was just it wasn't saying that Rare is bad. It was just saying with these two names, the drugs are already approved. We get the same high upside, but without the binary risk. So for that to clarify, it wasn't like I knew what was coming. It was just a matter of if I can get the same return for a lower risk, why wouldn't I do that? Wasim, I see you're joining us. How you doing, buddy?
Good, good. How are you? Sorry, I'm
Good.
a little late today.
Oh, no worries. I saw you were about to make a video on a company that received a complete response letter.
Yes, I did my research and thank God I didn't record the video. Yeah, so now I can include that in my video. But yeah, it was a surprise to see the FDA act so quickly. I mean, the PDUFA is until uh, August 31st, but the complete response rate arrived almost a month and a half
What ticker
before
are we,
that.
what ticker are we discussing again?
Uh, Capricorn,
So
CAPR.
CAPR. Okay. I know that might be one that falls into Tom or some of them's wheelhouse where it got rejected, but it doesn't look like it's a lost cause. It's more like they have more data from one of their studies. And pardon my ignorance on this one, I haven't dug into it, but it sounded like they had some manufacturing issues and more data is coming in the third quarter, and then they will resubmit again. So not a lost cause, right? Wasim, you probably know more than I do.
Yeah, so it's very interesting. Interesting things they have is, well, the CEO really doesn't have any experience in biotech at all. Her previous experience was as a VP in a company that failed, so they closed down. Once that company closed down, she co-founded Capricorn, and then phase two trial was with 20 something patients, and now phase three trials, they still haven't disclosed. They still haven't done the readout. And I wanted to ask, I was confused because I thought that in order for the FDA to make a decision, they needed to receive phase three trial data.
Mhm.
But this company is still holding on that data, and they were expecting a response even before
Mhm.
um, the release. So I'm not sure. And the third point is that they hired the statistician, her name is Suzanne, that made the numbers for Cassava Sciences.
Okay.
So those numbers were wrong. And after that, she was hired for Capricorn. So I don't know what to think about that. But yeah, so interesting points there.
Perhaps a red flag that cassava was known to be a fraudulent company, right? Or something like that. To have your
Yeah,
membership come from one company like that to another.
exactly. And then not releasing the phase three readout um, before an FDA decision. I don't know. I mean,
Okay.
maybe everything is good, right? But
Mhm.
who knows? I don't know. I'm not sure if anybody else has anything to say about that, or if anybody is following the ticker.
Uh, I'll leave that open to the others. The only thing I'll say is I got a question from somebody else in chat, and they asked me about Regenix Bio, RGNX, which we own, and they said, is there negative read-through from the FDA decision for Capricor to Regenix? And anything's possible, you know. Sarepta with its safety issues lately, but it is a different modality, gene therapy. Regenix has had zero, I repeat, zero serious adverse events so far. So it kind of seemed like an apples and oranges. Capricorn, anybody else following that one or before we move on? I didn't think so. I knew they, one thing that kept me away from that was that they had partnered out a majority of the rights, right? Wasim, I think they partnered out Capricorn. Maybe they kept something like 20% of the royalty, or I don't remember, but
That's a good point. I haven't researched that.
I was pretty sure they partnered out a good bit of the economics, and they're just that way another company does the heavy lifting, and they just receive the royalties or profit share or whatnot. So that's in
Uh,
their
and
that's in their slides.
Yeah, and also for me, it's the amount of patients that they would be getting, right, in using their drug. Um, I mean, um, it's one out of 3,500 newborn cases
Okay.
that they may get the Duchenne, which is the illness. So I'm trying to get into companies with a broader population of
Mhm.
clients, future clients. So for me, it's a no, but I still wanted to just cover it.
No,
But
of
it seems
course.
like it's getting a lot of retail sucked in.
Well, it's maybe you do something similar to me where I like to cover companies. I've been doing the JF's daily diligence series where I share my notes on a particular company. And it doesn't mean I'm going to buy it soon, but it's nice to investigate these companies so you'll be ready in case later on they meet your selection criteria. So I've been doing that with the number two, trying to get prepared ahead of time. Let's see what else. Uh, Go ahead. Somebody said something. If
No,
not, go ahead.
I was just curious, a side note, with the haircut, does Moreo have a future? I mean, it looks awfully cheap, and being a bottom feeder, I was kind of sniffing it,
Mhm.
but I don't know enough about it to get excited or not.
Good question. So Mereo, MREO, is the European partner of Ultragenyx Pharmaceuticals, which we took profits in Rare, RARE, before the readout. Um, For me, at least, I have been talking this one over with a fund friend or two, analysts, et cetera, and they seem to be pretty skeptical about the Q4, the final analysis hitting. And that's directly against, all this analyst notes that are saying it's like 80% chance that it's positive. Um, for me personally, one of my big weaknesses as a biotech investor is I'll see these patient case studies. Like in rare slides, they have a type 3 OI patient who before was in a wheelchair because of all the fractures, and he went from wheelchair to walking to standing or standing to walking, running, and now playing baseball. And so
Hmm.
when I see stories like that, they just get me so excited for the patients that you forget, oh, just because this drug is active in some patients doesn't mean it's going to work, doesn't mean the trial is the right design or has the right inclusion criteria. Um, so both Mereo and Rare have big upside if the trial hits. Rare, they have a cash crunch. They only have a few quarters left of cash. So I would imagine we see a secondary in Q3 or Q4. Moreo Longs tell me, I haven't looked into it, that they think the company has cash to 2027. So maybe that would be the better bounce play. Um, with Ultragenyx, it feels like things are setting up more for 2026. This year, they would get the MPS3 gene therapy program approved, GSDIA program approved. Next year, between the two of those together, could be 1 billion or more peak sales combined. And then they have their Angelman syndrome program, which for me is the highest probability of success. And that's 2 billion or more peak sales. And that would be phase three data next year. The trial enrolled way ahead of schedule, which is at least a good sign in terms of patient and investigator excitement. Um, so we'll see how low the valuation goes for Ultragenyx. In my playbook of potential setups, I have conditional setups, which means I'm not allowed to enter them unless specific conditions are met. So for Ultragenyx, I would like to first have them get the financing out of the way, that funding overhang cleared. So if they have a secondary offering, and then we'll see where the share price is close to that final analysis year in. If they're down in the $20 to $25 range, that starts getting quite interesting. So long answer to your question, sorry.
On the Moreo side, am I correct in thinking that the trial data, there's follow-up trial data that's supposed to come fairly soon? Is that correct? It's like before the end of the year?
Um, if you're talking their other asset, I haven't been following it, but if you're talking the setrusumab and the Orbit study, yeah, that the final data, which management seems highly confident in, is by year end, is the wording.
Okay. So
So
it's it's not a real long term. I mean,
Mhm.
If Moreo is going to go, it's going to go within 6 months.
Yeah, for you, I can see how that would be the rebound and run up play, and then you either exit before the catalyst or you sell half before the catalyst.
Okay. Thank you. Good to know.
Hey, no worries. Before I forget, with our collaboration with the Mama Liz Foundation, which, as you all know, is kids with cancer in Venezuela. We've been doing that like 5 years, and you know the example I like to use is retinoblastoma, a specific type of eye cancer in the U.S. should have a 90% cure rate, should be very easily curable. And down there, it's less than 50% because A, they can't get MRI scans. Those aren't found in the hospitals, only in the private ones. You have to pay for it. Um, B, there was a stat article lately that came out by Matthew Werper, if sorry if I pronounced his name wrong, one of the head editors of Stat, and he was talking about how the chemotherapy that are made in India has failed quality control standards. They either have too much or too little of the active ingredient. And that was fascinating to me in a bad way because Mama Liz has been saying for the last few months that they're seeing a far higher rate of kids relapse than they should with these cancers. And so they're wondering why that was happening. They realize it's due to those chemotherapies coming from India. So they've had to import them from other countries like Colombia and pay a lot more for them. Now the doctors in Venezuela are saying no more chemotherapies from India or medicines for that matter. In any way that we've had quite a few anonymous donors from chat who wanted to stay anonymous. So I just wanted to say thank you to them. It's pretty cool when, 200 or $400, whatever it is, we're able to knock out a month's worth of chemo for each of these kids. So the way I put it is I ran to a friend who's pretty high up the chain on artificial intelligence, a company on the cutting edge of that. And he wants to start trading and investing in stocks. And he's wondering, do traders, investors actually add any value to society? And my response was, A, we're supporting these companies we invest in. Hopefully, they're able to raise money at higher valuations, which in turn means they can pursue more clinical trials, get to patients faster. But outside of that, I know many of the traders guys in our chat, participate or donate in charities or other things that are near and dear to their hearts. And so that was my example of how we all, in our own small way, try to add value back to society. So I thought that was a interesting tangent for what it's worth. I just wanted to mention that before I forgot. Moving on, as far as ideas on radar, anybody want to have tickers or names you want to discuss, either your highest conviction that you already own or something you're looking at potentially buying? That's open ground for anybody. Tom, Dennis, Wasim, you name it. And I see we have Steve and Robert there as well.
Well, Dennis and I have been kind of going back
I
and
can
forth
have
on Fortress F Bio. It is by far and away my largest commitment. It has been. And I keep looking for the problem, and I mean the problem is that it's dirt cheap and it's been that way for a long time and it gets cheaper. But
Mhm.
other than that minor issue, um, I keep looking for what's wrong with the picture and I'm not finding it. So it's an interesting company and it seems to be getting some of their stuff to line up fairly consistently.
Mhm.
And I think there's an exciting second half in the works, and we'll see what happens.
Cheers. I'm looking up that ticker now just to see, has it been running at all or pulled back? It looks like it's pulled back. Mm,
Yeah, a little bit. It's in a
okay.
slow downward trend right now.
Well, April
Um,
bottom was $1.40, so now it's at $1.90. Okay.
yeah. If you
Yeah,
look at the last month,
it's been a good run up since the bottom.
Okay.
I started grabbing heavily in the 150-ish range, and it's been up over two a little bit. The interesting play is FBIOP, the preferred shares, which are in default. Um, but they're accumulating, in theory, they're accumulating dividend payments, and the cure at this point in time is in the $8 or $9 million range. FBio has plenty of money. If they wanted to, they could cure the back dividends. Whether they want to do that, I'm trying to figure out reasons why Rosenwald would prefer that they be in default. I think perhaps there's some benefits to holding the price down for a while, maybe, I'm not sure. Um, but I mean, they've got a $25 face value. They're trading plus or minus a little bit over $8 now. 9.75% dividend that's accumulating. And they've been in default for about a year and a half. So it's like $2.50, something in that neighborhood of 35% or so of deferred dividends that have accumulated. And the company's really doing quite well. I mean, I don't see any probable balance sheet issues with FBio, given the sale of Checkpoint, given the Derm position that they own,
How much of Derm do they own, you were saying?
47%.
Okay. We
So, I
had
mean,
that one in Playbook at 550, but I missed it. That was your alert though, so congrats on that.
yeah, I mean, I've put all the money into FBio. I haven't been buying Derm.
Okay.
Just I figure if you can buy pro rata, if you can buy Derm at half of what the market's got Derm valued at or something like that, I'd rather be buying it in FBio, but it's not reading through particularly well. But perhaps if Derm has a good launch and they report in a month or 3 weeks or whenever, if they've got a launch on Emrosi that's working, then we might see some FBio movement. I think the big thing for FBio is they own, I forget, plus or minus 75% of Cyprium,
Mhm.
which has a PDUFA date on a partnered drug at the end of September. So there's a good chance we could see some momentum into that. It comes with a PRV, which Cyprium retains control of. So FBio would end up getting 70+% of the PRV money, which is, if they sold it for 150, FBio plus or minus is 50. Uh, the PRV by itself is more than double the market cap of all of FBio. I mean, it's just kind of, the numbers are really stupid.
I'm actually with you on FBio. I think it's just a great play. Don't they have a relationship with Mustang Bio, which reported some good
Yeah,
P1 news this week?
Sorry, I had a hard time hearing that. Hang on, let me put an earphone in.
He was saying that he thinks they have a relationship with Mustang Bio, which reported positive data this week.
Yes, they don't own a huge chunk of it, but they have a pretty good royalty stream of Mustang. Um, they have Avenue,
We can't hear you, buddy.
but yeah, they've got their fingers into all kinds of stuff.
We still can't hear you. You might have to do the other what you were doing before.
Yeah, I'll give up on the earphones for now. But
There you go. Now we can hear
um,
you fine.
the anyhow, yeah, there's a lot going on with FBio. The valuation is super cheap. Rosenwald, I've seen different numbers. I thought his percentage of holdings were much higher, but he's still. I mean, my most recent numbers, he's in the neighborhood of 15% of the company. So the CEO's got a lot of skin in the game. Michael Weiss, founder, major shareholder of TGTX, and Rosenwald's sidekick owns about 6%. So, I mean, when you look at FBio with a market cap of 50 million, I mean, Weiss could buy the whole company for lunch money. So there's some deep pockets that are involved. FBio is not going to go away. And there's some longer term stuff in the pipeline that's very interesting, although I tend to discount that. I'm not a longer term pipeline investor, but there's a lot of interesting pieces there.
I like what you said about it being stupidly cheap. That reminds me of a conversation I had with a friend who's a fund manager recently, and he asked me how much I do on the DCF, discounted cash flow analysis. And I responded honestly, for me, it's more just simple back of the envelope math. You probably do similar. And I'm looking at, for example, Syndax, which we own, SNDX. I'll assume far conservative, even pessimistic peak sales. So if the drug could do Revuforj, a billion or more peak sales, and here I am assuming only 400 million, um, and you're getting in at a valuation of 200 million enterprise value or whatever it is, as Tom said, stupidly cheap. You don't need much to go right at that valuation. And so, even though I don't own FBio, I think we think similar about some of our holdings, the way we value them.
Well, it's always fun to sit around and figure out, whether your positions are going to be worth, 3, 5, 10, 15, or $100 million. But the reality of it is if they make, 300,000, I'll be happy. So anything above that is gravy. Those are just random numbers. I'm pulling them out of the air, but I think DCF tends to have a way of getting your tail wagging, and you put a lot of work into everything that could be. And the reality is that you assign probabilities to everything, and the bios are typically either binary. It's a light switch. I mean, it either works or it doesn't work, especially in clinical stage stuff. Maybe a little bit less so with commercial, but I find even in commercial, I mean, the drugs either catch a wave or they don't. And if they catch a wave, the sky's the limit. I mean, look at Verona. Um, you know, I was playing with that when before it got the PDUFA. I don't know. I think it was at 5, 6, $7 a share. And then I read one negative article on it that said, we don't think it's going to be that successful commercially. And I think I dumped it all at $10 and thought I was brilliant. And,
Been there.
and here we are.
Well, there's that other Prader Willi stock. I don't know why I'm not remembering the ticker, but they just got a drug approved for that disease of excessive hunger. And before they were under $1 a share, and they just did a secondary at like $88 a share. So I'm forgetting the ticker, but it's now worth like $5 billion, the company. So when you see those turnarounds, one of my biggest problems out of the gate when I started investing in biotech in 2008 is I would always dream, like you said, about the upside. How high could my stock go? But I would risk management would go on the back burner. And I find that if we as investors tend to project too aggressive returns for our portfolio, that also means we are being way too aggressive with position sizing, lack of risk management. That's why I said, as an example, why I like the DCA portfolio series that I'm doing, where the personal DCA portfolio just hit new highs yesterday. Is my goal is to be boringly profitable. I'm not trying to go for some aggressive return. I think we used on the spreadsheet the example analysis was if it grew 12% a year for 25 years, that would end up being over $2 million when 25 years is up. And so obviously we are well ahead of that target. 2023, it returned 114%. Last year was a pretty normal year. I gave back way too many of my gains in Q4. So that ended up being like a 14% return. But the idea is if you're trying to just, obviously we're all investing because we want above average returns, but at the same time, we should not be uber aggressive or, as Tom said, saying, oh, this company could be worth 10 times this, or whatever it is. It could be. That's one reason why before I never did price targets on ROTY in the portfolio updates, because if you have just one price target, people get confused when you sell or why it didn't get there, what happened. And that's been really nice this time around using you all's feedback. I've had 3 different price targets. One is the bull, like if it does what my thesis is, where do I think it could go? And then you have blue sky, which is if it does really well, where could it go? And then it has the bear price target, which is if things don't go according to plan, how much could you lose? So I think for each of us as investors, it's important to be eyes wide open, FBio or whatever your chosen ticker is. Plan for each scenario, and that way you won't be surprised when it happens, good or bad.
Yeah, and just to
Jonathan,
add to FBio,
What's up?
go
go
ahead.
ahead.
I just wanted to add to FBio. I
Go
did
for it.
some research on it briefly, some time back, and I stopped doing research because of I was reading that it was really hard to diagnose since it's an illness that either you're born with it or not. And some of the um, routines that doctors follow with a newborn didn't include any um, test for, I think it's Menkes disease. So I was like, okay, so even though it's very rare, it's also hard to diagnose. But I was not aware of the partnership that FBio had with this other company that you guys mentioned. And also, I was just taking a peek at their balance sheet, and it's holding $69 million in cash at 55 million market cap, which is stupidly cheap, as Tom said. So, uh, just looking at the balance sheet it doesn't make sense.
Yeah, Wasim, FBio recently came out with a new PDF presentation, and it's well done. It goes into um, it kind of has layers where it goes into the early commercial products that they're working on and what's going to make hay quickly. And then it goes into the longer term assets and what their positions are and FBio is almost like buying a mini biotech venture fund, really. It and I kind of like the idea of, I mean, when you get a guy like Rosenwald and his sidekick Weiss, I mean, they're way more qualified to figure out what to put money in than I am when it comes to biotech. And so to me, it's an interesting play, especially at the kind of valuations that they have. There's a theory that I think is highly probable, which is that the current share price of FBio is held down because of the default on the preferred stock. FBIOP, which stopped paying dividends, I don't know, year and a half ago, um, has kind of cast a cloud over the FBio common. And there's a scenario where if they either pay the $8 million to put FBio preferred back into a performing mode, or frankly, with derm royalties and checkpoint royalties and PRV money coming in, they either pay it off or they finance debt to pay off to buy back the preferred stock. I think it's a double whammy. FBIOP is going to have a double, possibly a triple for going back to a performing face value. But I think as soon as they take that cloud away from FBio, the FBio common's going to take a step up too. At least that's the theory.
I
Yeah, I'll
like
take a look at the presentation. Thanks
I
for
like
that.
what Tom said before. I forget how you said they updated their slides, did a good job of explaining each of the value drivers. And for me, I think as investors, sometimes we forget to focus on these very simple indicators. Like one of my pet peeves with a company, Arrowhead was like this for a while when we didn't own it, is they would never update their slides. So it's June, and the most recent slides they would have would be from January, JP Morgan. And for me, it makes me feel like as a shareholder, the company doesn't care about updating its shareholders. Or conversely, sometimes they don't update because they know they're having bad news that's going to come and they want to issue the new slides after that bad news is out of the way. The other indicator being if you see in the slides, let's say a drug candidate this company has, and they devote one slide to it, and then later on they're devoting 2, 3, 5 slides to it. It's because they have incrementally more and more belief, and vice versa is true. Like a drug candidate that before appeared at the front of their slides now appears at the end of their slides, or before it had 5 slides dedicated to it, now it's just one. And so these kind of indicators can let you know give you an idea of, red or green flags adding up. So I think too often, at least for me, maybe some of you guys can relate, we don't look for those indicators, which are kind of the low hanging fruit about, okay, are things going in the right direction here?
Yeah, let me make a comment about FBIO's
Please.
response. I've tried to contact the company on a couple of occasions. First off, they have a phone number, but when you call it, nobody answers the phone. Each and every time you want to contact them, you can leave a message, but then they don't return the call or respond back in terms of um, anything that's written as well. So, as an example, I wanted to find out about the exact mechanism for repaying the arrears dividends for the preferred shares. I still haven't gotten an answer, and that was back from April, and no kind of response. Now, putting that aside, I'm a strong believer in not only the preferred shares but also FBio. But I don't understand the disconnect between the way they farmed out the uh, investor relations activity and the failure on that end, just as you were indicating about not updating slides and so on. With regard to the preferred shares, I want to just go through the numbers just for a second here. Currently, you're looking back in July of 24, they suspended the payment of the dividend. And at that point, the shares were selling at right around $16 a share, the preferred shares. And then it cascaded downward as you know if you've looked at the particular stock. And today it's looking at something like $8. So as Tom's indicated, if and I think it's not if but when those preferred shares get reinstated, there's very little uh, resistance, it seems to me, to not get back to close to $16 where it was a year ago. That's 100%. And more specifically, if you're a dividend type investor, and you've got a preferred shares that are paying out, let's see, I think they're at 9.75% in terms of the dividend. That's a awfully attractive dividend for a company that's like this. Now, when they issued those shares, this is back in 20. So I don't know what their status was in terms of their cash balances and so on, but it had to be, pretty good at that point to be able to pump those shares out at $25. So that there's just an awful lot of upside to that. And from my perspective, I think within less than a year, I'm going to get the dividend reinstatement from the point at which I bought them, which was not that long ago. So, and B, I'm going to get the share price back somewhere between $16 and $25. If this were just a straight preferred share on the open market, it would be selling at somewhere between $24 and $26 a share because of the coupon rate. So there's an awful lot to like about this. My theory is that the preferreds at this point are a little better value than the stock itself. Um, and I won't go into all of the reasons for that, but once that preferred share issue gets resolved, then I'm heading directly into putting more money into the FBio as a standalone. The
I,
difficulty with FBio is it's got so many moving parts,
mhm.
and the owner is probably such a brilliant guy and playing three-dimensional chess while the rest of us are down here doing earthly things. It's hard for everybody to try to keep up with their vision and what they're doing. I'm hopeful, but nevertheless, so for example, I now own Derm, and I do that even though it's, as Tom's indicated, FBio owns the major portion of the dollars there. But there's such a disconnect between the subsidiaries and the parent here that it's just difficult to try to figure out which of those are the right ones to own at the right time.
Definitely appreciate the overview on FBio. I think it seems like it's nice when a number of you guys own the same ticker. So it's like each person is able to contribute their view on it. My one caveat there, like you said, if management isn't getting back to you, that can definitely be a red flag. I feel like the majority of companies tend to be, if they have a good story, they're always trying to get that story out there. So especially you guys from chat, if I mean, not that it's something you need to leverage, but when you're like, hey, I'm part of a 500 member biotech investor chat, or even just as an individual investor, that's what investor relations is for, is to get back to you as soon as possible. Like Eurogen, URGN, to their credit, their investor relations is very responsive. They were even doing free KOL calls, not just sponsored KOL calls, but free ones on Slingshot and other things like that. Sorry. Um, and so if investor relations is very responsive and gets back to you, that can be a great sign. But conversely, if everything looks nice here, as you said, FBio on the balance sheet, or on these other assets you're looking at, there's a value disconnect, but their investor relations is not getting back to you. I would just ask to be eyes wide open about that risk, because that says something to me if they're not willing to take the time to address their investors. I mean, maybe that's a nothing burger, but just something to keep in mind.
I think it's more than a nothing burger,
Yeah.
to say the least. And I was so disappointed because there's so many great things about this company that it's a total disconnect. I'm really looking forward to the earnings call on the second quarter here. So unfortunately, we got to wait a month or so before we really get to see a lot of the moving parts and how they're going to integrate.
This is old news for you guys, but for anybody new who's joining, it can be really hard when we get carried away with the story. We really like a company, like I'm pretty high on Arcutis, for example, or some of the other holdings, or Syndax. And remember, in commercial stage biotech, no matter how much I love a company, my maximum allowed portfolio weighting is 10% of the portfolio. And if it's clinical, it's 5% of the portfolio. So that doesn't mean it can't grow more on its own, as the stock price goes up. But that rule for me is specifically there because I tend to either get too aggressive, think poker, going all in with your chips, or I get so high on a story, I like the stock so much that risk management goes on the back burner. So that's something to be aware of. Tom will like this next fact. Our top 8 holdings in the core biotech portfolio, our top 8 are all sheep. So they are all sales picking up second half of the year to 2026. So that's Arcutis, ARQT with Zorg launch, Ascendis Pharma with Yorvipath launch and PTH. That's Dawn, Day One Pharmaceuticals with Ojemda. Hopefully has a better Q2. That's Fold, FOLD, Amicus Therapeutics, where they have the POMOP launch in Pombiliti-Opfolda and Pompe disease, where their guidance got lowered first half of the year. But they have geographic expansion, all these countries they are launching the drug in. And the simple fact is they are just taking longer to unlock those geographies to get the first patients treated. And so that sales growth should come later this year and next. Harrow, HROW, is up 11% today. That's our number one holding now, 12% of the portfolio. It's now at 35. We did quite a few DCA ads in the mid 20s, taking advantage of the overreaction to the Q1 report. SC Pharmaceuticals, SCPH. At one point, that would have been almost 20% of the portfolio. I took partial profits on the run up, but I'm trying to hold the rest of the position patiently. They have their launch of the subcutaneous FUROSIX, that finally has another indication, the kidney indication underway, class 4 heart failure expansion indication. And they finally got their Medicare tailwinds taken care of. So when patients hit their copay max, that's when the drug ends up being paid for by insurance. So they have these tailwinds picking up this year and next. We have Syndax Pharmaceuticals, SNDX, with Revuforj, which should hit NCCN guidelines, be included in guidelines for the NPM1 population. And they just got assigned a PDUFA date a month ahead of their competitor, Kura, Kura Pharmaceuticals. And what was interesting is Kura actually submitted to the FDA before them, but because for Kura it's a new drug application, it takes longer to review. Versus for Syndax, it's a supplemental indication for a drug that's already approved, a supplemental submission. So that's why they'll likely get approved before. And then Tarsus, TARS, which we just added to again, and that has Xdemvy sales growing this year and next doing the direct to consumer campaign. So those are kind of stories I like where you're just able to hold them patiently. The way I always explain it is sometimes people are expecting me to have some fancy strategy. The quarterly call comes out, the quarterly report. They're like, JF, what's your plan now? And I'm like, same as always, to hold patiently. And if something comes out and shows me I'm wrong, I'll be the first to open my mouth, insert my foot and sell it and move on. I mean, that's what we did with Ultragenics, not because at the time there was anything wrong, but just risk management. So anyway, that to say, our top 8 positions are sheep. So I thought Tom would like that.
Well, and there's a lot of good sheep in there. Not that, I mean, they wouldn't be there if you didn't think they were good, but we've converged on a few of them. I like Dawn quite a bit. The Either the CEO or the CFO made a comment at the first quarter ER that I put up in the chat that they gave a fairly specific reason why their Q1 sales were down. But they also went on to say that we've had very, very strong sales in April at the time that they did the ER. And so I think he kind of tipped their hand, and I think the value has come down. There's a gap. I think the gap goes up to about $11, and then they were trading more like 15 early on, off the top of my head. So, being down at plus or minus 7 right now, I think if they can do something good, it's not unreasonable to think that they might close the gap over maybe the next 2 quarters, which would get them back up to about 11. So, a 7 to 11 move could be very, very nice.
Oh, well said. Well said. I don't have my notes in front of me, but I believe they said March and April were strong months for their launch. The problem with Ojemda is this is for oncology indication that's a slow growing cancer. So these patients, let's say they only see doctors, what is it, twice a year or something. So there's less urgency to treat. And so that's why this launch has been a little bit slower out of the gate. But still, it looks like it's gaining momentum. So I agree with you. If we have sentiment at the absolute lows right now, even just a few good months in launch and things turning upward should hopefully mean the stock rebounds to a more reasonable valuation.
Yeah, they also, in Q4, they also spent a bunch of money. And so they had the combination of fairly low sales and seasonal spending. Q1, the spending looked better, but the sales weren't great. And I think if Q2, the spending's okay and the sales are up, we could see the stock recover nicely, I hope.
I'll say one last thing and I'll leave the floor open to anybody else sharing their ideas. You can see June's playbook post, where I post my current ideas on Radar that I might move money into. And I just want to remind folks that on my phone, I constantly update those based on either price action, like for example, TARS was a few names down, and then when the share price fell to 39, that's when it went to the top of my list, and I added to the position. Same thing for our cutest ARQT when it fell to 1320 more or less is when that moved up to the top of my list. So next one's on my playbook. I'm just looking at my phone right now. I have Tarsus, which I think it fell again to 39 today, and it's 9% of the portfolio right now. So I wouldn't mind if it stays in the 30s to top it up one last time to bump it from 9% to 10%, my maximum. Um, Kura, Kura, which is another Menin player like Syndax. They have their PDUFA date in November, and they had something crazy like 600 million in cash, runway to 2028. Very strong company. Questionable decision by the CEO when he decided to partner the drug. I felt he gave up too much in the way of rights. You can see in my DD post. Uh, so we sold that stock at around $11, I believe, and now it's down to 7 or 6. But I like that setup there. So that's it's actually one of the few names trading at negative enterprise value, so less than the value of its cash. Veristem VSTM is a launch play. They just got their lead dual drug combination approved for LGSOC, a variant of ovarian cancer. But those launches, might take a few quarters out of the gate to get some good momentum. So I don't have a rush, but it's pretty up there. Eurogen, URGN, which you guys are familiar with. On the one hand, I'm expecting a slower launch out of the gate. It's pretty hard to change physician their habits from doing just the TERP surgery. But on the other hand, I think when it does get traction, that's a really big market, and they have a few years lead ahead of their other competitors. So I have in playbook, that's a conditional one where like if it fell back to the $10 to $12 range, I would consider buying that. REPL, Replimune, which some of you all are familiar with, Replimune. They have a PDUFA date coming up with the FDA soon, so we'll see if that gets approved or not. Because it has such a really good side effect profile, very favorable, and it's just a simple injection. It could be a really easy add-on to PD-1 therapy for these melanoma patients. So again, those are just examples of names in playbook, and they move up and down based on price action and how attractive I think they are, how actionable. Like if there's two setups, and let's say they both have 100% upside or 200% or whatever you think, but one of them has its key catalysts or launch metrics sooner than the other, then obviously we choose the one that's more actionable, has more opportunity to move near term. So just wanted to give a window behind the scenes, what it looks like to my process. And with that, I'll leave the floor open. Anybody else, any other names on radar you wish to discuss?
Well, I just want to, I didn't have a chance to talk to Tom since the last time we had a chat on the forum regarding the Cormetics. It was the earnings call. It dropped from $11 to 6 within like 4 days.
Which ticker
And
is that again for everybody?
Cormetics, CRMD. And basically the earnings call, it wasn't bad. It was just a little, I mean, I don't know what people were expecting, but they just said they were still in negotiations with some of the big providers that they were trying to sell their drug to or their solution, and it sold off for no reason. And I remember someone in the chat had a really well-written article explaining why he was selling off the stock as well. And Tom and I were buying on a falling knife. I thought it was crazy. It was fun. I think, Tom, you were buying below 750. And within a month, it went back up from $6 a share to 17. And now it's back at $11 a share because uh, they did a public offering. I mean, that was smart from the CEO to do a public offering on that sudden uh, price share increase.
Yeah,
So yeah,
I'm wondering what they want to use the money for because they
exactly. They
have
don't have
cash.
anything.
I mean, well, they have cash and they're already profitable and the sales are growing. And then they go do dilution. And so I'm kind of wondering what are they thinking? There's got to be a story behind that. I currently don't have a position. Again, when it went from 7 to about 10, I thought I was brilliant and sold it, and of course missed the big run up. But up is up, and they kind of look attractive now because they've got money in the bank, quite a bit of it, and a growing widget. And I'm suspicious that they've got an idea, but I don't know. Maybe they may dump all the money into a development. Maybe they like squirrels too.
Yeah, it's going to be interesting to see what they do with the money because they don't have a pipeline. I don't know. I sold everything at 13 and I thought I did great just to see it go into 17. But yeah, it was a good run.
Before I forget it, Steve, is this your first call with us? I feel like this might be your first call with us, so just wanted to say thank you for joining.
Sure, my pleasure. Uh, Let me ask a question. Does anybody follow Prothena, PRTA, or have any reaction to it?
Not from my end. I don't know anybody else.
Well,
PRTH.
well, sort of following on Tom's methodology, it seems like a really good asset play to me anyway. It's a company that really doesn't have any commercial drugs, and in fact, they had a flop recently where their P3 and AL amyloidosis bombed, and they terminated development of that drug. But the interesting thing about it is that when they did that, they also announced that they were engaging in a corporate restructuring and strategic analysis with outside advisors, and they laid off two-thirds of their staff and announced that at the end of the year they'd have almost $300 million in cash. So it's kind of unusual for a company to announce how much cash they're going to have at the end of the year. And the further interesting thing about it is that they have a number of really lucrative partnerships with Bristol Myers, with Roche, where they're developing a Parkinson drug, and Novo Nordisk. So they're expecting milestones and royalties from those partnerships. Again, it's none of these things have been commercial, but they're doing the development work and they have contractual rights to royalties and milestones. So you've got a company that by the end of the year will have about maybe $5 in cash, plus expectations of income streams coming in from these various partnerships. Um, the sort of only fly in the ointment is that they have only one legitimate asset, which is a Alzheimer's drug, PX012, that they've been working on for quite some time, and they're supposed to announce the data in August. And again, it's not supposed to be a very good news, but they've also said that they're not going to take this into P3, and if they can't find a partner, they'll terminate the program. So it sounds like they're really slimming down, and I don't know how this is going to turn out. Whether they will um, just become a stub company, whether they'll sell the company, whether they'll liquidate, or what. But it looks like a really intriguing situation. Um, so that's my contribution anyway. Just check
Hey,
it out if nobody's following it.
hey, thanks, Steve. To correct on the ticker, I was trying to look it up, and it's PRTA,
Correct.
PRTA, and it's right now 640 a share. So you're right. You said cash is around $5, right?
By the end of the year, yeah.
Okay. So yeah, only $1.40 assigned to the actual assets. And I see what you're saying. I'm seeing the PR here that Roche is just moving prasinezumab into phase 3 for early stage Parkinson's. So
Yeah.
I
Of
don't
course,
know
it'll
what.
take a while to
Yeah.
develop that. But
That's always the problem in biotech, isn't it? Like when we can see there's good value there, but the question is how long does it take for that value to be realized for us as shareholders?
But I believe that in each of these partnerships, the partners are paying the bulk of the development expenses.
Well, I
So
like
it's
when
not
you
like,
go ahead.
yeah, it's not like the company's bleeding cash.
No, I love it when they can keep expenses as low as possible, unlike Biohaven, which is a bit bloated these days. Um, but yeah, it feels like these days it's so redundant for many of these small companies to try to build a sales force when it's so hard to do that. And you have all these big pharma, big biotech companies, especially in the neurospace or in oncology, who already have these really solid sales force infrastructure already in place. It makes sense to partner it versus burning all that cash and doing it yourself. So I agree with you there that it's nice to see it when a company tries to keep their expenses as tight as possible, overhead low. Tom is a big fan of low overhead.
Yeah, yeah,
Uh,
I'm a
Go ahead.
fan.
Anybody else? Any other tickers before we close? Any other tickers? We were talking Prothena, PRTA, Wasim, or Dennis, or anybody
Yep.
else?
I'm looking at two. One is Nectar, NKTR, which they had the phase two result on dermatitis. I know they need to run a phase three. Um, there's going to be a lot of um, cash burn still. So I'll be researching it and maybe starting a small position just to track it and keep dollar cost averaging little by little, maybe through their phase three. They had very good results, so uh, I'm looking at that one. The other one is I haven't researched it yet. Xene, Xene, Xenon, it's the company name, and they're focused on focal adult focal epilepsy, and they're expecting to release phase three trials by beginning of 2026, and it's been a 5 year trial, 5 year phase three. I mean, the only reason I could think they're running a 5 year trial is because they really want to have these approved. So I'll be researching that probably in the next month.
Cool. Thanks for sharing. For what it's worth, Zine, we used to own it in ROTY when it was the clinical stage portfolio. I think we sold that one for a double at one point. Drug was very efficacious, but they had just a few safety concerns, nothing big. They had a big improvement over the predecessor, ezogabine. Um, so it looks like, as you noted, epilepsy is the main indication for that. They're going to try to pursue depression and some other neuro disorders. I think that might be where Biohaven BHVN, which we do own, they have a much more selective drug of the same class, KV7, and they are pursuing major depressive disorder, I think bipolar or some other indications too. And so I think they actually failed a bipolar study, but they're still doing epilepsy as well. So if I had to guess off the top of my head from what I remember with Xenon, we know the drug's highly efficacious. So that would be nice if they have the phase three data as positive and they get bought out or whatnot. The only caveat being hopefully no new safety signals. Um, what was the first ticker you mentioned again?
Um,
Nectar.
yeah, Nick.
If you saw that post on X, bio Twitter from Adam May, he used to be in our chat for our TY biotech community. Very, very smart guy. So he and I have been back and forth on that name. Doesn't fit my selection criteria just because it's not late stage enough. But
Yeah,
he's pounding the table on it pretty hard.
I can see that.
I announce myself.
Well, he's looking forward to the alopecia readout, alopecia
Yeah, I'm the
areata,
one
which is
that
urine.
said to stop you from going to the ER.
Pardon?
Well, it might be a good idea.
Yeah, I think he's not
This-
he's not
Oh,
muted,
oh, I just
Nicholas.
muted. It's
Okay.
fine. Thank you for that. Yeah, I couldn't tell. So he's looking forward to the alopecia. And then their partner before, was it Lilly or somebody else they have a lawsuit with? So if they actually end up winning the lawsuit, then that would be more money coming into. So, so far at least he's been spot on. So
Yeah, it's interesting because he mentioned it. I think it's been to his X account since January. He said that this big story for this year was going to be Nectar, and I read it some time ago, and I was like, phase two, the biggest story. I was like, nah, probably not. I mean, probably not, right? But I don't know. I think the big story for this year has been um, Verona so far. That's been the biggest acquisition.
And Blueprint got bought out
Uh,
as well.
yeah.
The only
So
the negative there is that those buyout premiums have not been very
very
large.
high. Yeah.
With Nectar, Adam made an interesting observation in our discussions that if you look a year ago, the stock price was as high as it was now without the data. And so sure, it's doubled for him from lows, but it's still pretty crazy that it's pulled back to a level where it traded a year ago with no data. So just kind of shows you still the state of biotech or the company. There still could be an opportunity there.
Yeah. Also have to look at shares outstanding, but taking into account shares outstanding, it's still at the same market cap.
Mhm.
Then okay.
But
But
before
a
I
lot
forget,
of people forget shares outstanding and just look at price.
yeah, or they forget there's warrants outstanding or debt. Before I forget, Jose is not with us. Jose Hurtado, he's at a rock concert today. So Jose, we feel really sorry for you. But I liked his
Enjoy, Jose.
approach to atopic dermatitis. Instead of going with just one player, he's going with several. So he owns Apogee, APGE. He owns Nectar, and he owns Corvus, CRVS. And I was trying to convince him on Arcutis too, because Arcutis has Zorev, the cream and the foam. And what's nice about Zorev is it's not either or. You can have these powerful biologic drugs and then use Zorev for whatever's left over. Um, but Corvus CRVS is also one that have hopefully appearing in playbook for July. I'm still doing, due diligence, but they have more data in atopic dermatitis coming in Q4. They have the ALPS data where there's nothing approved, maybe the beginning of 2025. And then they have their T cell lymphoma phase 3 data toward the end of 2026. And that's an indication where there's two drugs with accelerated approval, but nothing that's fully approved. And the drugs they're running their drug against, soquelitinib, are chemo comparators where the bar is really low. So it looks like that trial, to my eyes at least, has a high probability of success. So that could be one of those stories where later this year, second half of 2025 to 2026, you have a nice catalyst pipeline. So that's one to look into as well.
Sorry, what was the ticker of the last one you said?
CRVS, Corvus.
CRVS.
The
Yeah.
caveat being I think they have not cash woes, but they don't have a lot of cash. So I imagine they'll do their readout in Q4 and then try to raise cash after that. Their CEO owns a whole lot of the company, and he was the one before who worked at Pharmacyclics, which they sold to AbbVie for something like 20 billion or whatever it was. And they followed this playbook in the past a couple of times, like with rituximab, where you take a drug and you use it for cancer first, and then you expand into autoimmune and inflammatory disease. So that's what they're doing with soquelitinib here. They have trials next year for combining the drug with immunotherapy and solid tumors as well. And what's nice is because it's a highly selective ITK inhibitor, they've already, tested it in something like 200 patients. Some of those patients have been, there's a patient who had a complete response and has been on the drug for like 3 years. So I think an understated competitive advantage they have is a really large safety database. So at least hopefully one thing you won't have to worry about your thesis as an investor is any surprise side effects. By this point, we know it's super safe, super tolerable, adds on well to other drugs. So uh, that's one I'll be looking into as well. Maybe you'll do a video on it for us.
So, Jonathan, a scheduling thought. A lot of ERs are coming in early August,
Mhm.
and I'm not sure what you have planned for the next coffee call, but maybe August 15th to that third week of August after all the ERs are in
Mhm.
would be a nice time for the group to catch up and see what we learned at the ERs.
Hey, I appreciate it, and you nailed it. I try to do the same thing with the core biotech portfolio updates I publish. Those are typically quarterly, once per quarter. But as you all saw with the most recent one, I had so many notes piling up from the Goldman and other healthcare presentations that I already published it. And I'll try to do that with the Zoom calls too. So I agree with you. It doesn't make sense to do a Zoom call before the Q2 reports are in. But as soon as they are in, I agree that would be a good time for us all to revisit. Um, so yeah, 100% agree with you there. Thank you.
Well, especially as more and more of the portfolio is commercial.
Mhm.
The thing about, commercial ones is you kind of get bored waiting for the ER period to come around,
Sure.
and then you go through a week of disappointment, and then you wait again for another 90 days. But hopefully not disappointment, but it seems like they always come out disappointing.
Well, you're right. We are about 20% clinical right now. It might be more clinical if we add in something like Cura, KURA, or Corvus, CRVS. I also agree with you. You nailed something I forgot, which was Q1. I felt like Q1, there's a lot of seasonality, and the portfolio was overall performance in response to the Q1 reports was pretty disappointing. Um, and we have quite a few names in Q2, like Harrow, HROW, which performed well today, where the CEO is hinting at numbers improving for the last couple months. And we have the same thing for Dawn, Day One, DAWN, and several other names where it looks like the numbers should be improving. Even Fold, where they said something like April and May were their best months yet. So I don't want to jinx it, but hopefully we'll do much better in Q2 in response to the reports than Q1.
Yeah, that would be good.
Yes, we could all use that. Anybody else before we close? I know we ran a little bit over. Well, Tom, Dennis, Wasim, Nicholas, I know another, who was it who just left? Steve, and everybody watching us, really appreciate it. You tuning in. Looks like we said at the beginning of the call, like a few tailwinds are starting to come together for biotech. So I know for me, when you're going through those bull and bear markets, after you've come out of a bear market and suddenly things start getting better, you're like, what is this feeling of swimming with the current again? Because we're so used to swimming against the current. And when things start to take off and you see some speculative stocks, like today was Agen or INKT, or you see other names starting to take off, you're like, what is this? So hopefully after the Q2 reports, this call, we'll all be happy about where that went. So yeah, cheers, guys. Take care.
Nice seeing you guys. Thank you.
Yeah,
You got it.
I know.
thanks.
Cheers.